probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Oh, I tell you, Mike, have you ever felt that sickening pit in your stomach? The one that hits you when you realize the market just took out without me. and I'm not in it, and you hesitate, you second guess yourself. Maybe you told yourself it was just another bear market rally, or that it was too risky to jump in. And now you're watching from the sideline as the stocks explode higher, helpless, knowing you should have seen the signs, but you didn't. And now every green day feels like a punch in the gut. I know that feeling. What's that?
Yeah, well, one too many times. Too many times. Definitely all in the past.
Yes. I know that feeling because I've been there, guys. I've sat there watching the market rip higher while I was stuck in hesitation mode, too focused on fear instead of opportunity. And let me tell you, it's brutal. Oh, it's painful. But the good news is you don't have to go through that again. Today, we're breaking down exactly why traders miss market bottoms or just miss stock bottoms, why hesitation costs you wealth, and how to make sure this never happens to you again. So welcome, everybody. This is Trading Truths, where we cut through the noise and expose the biggest myths and hold traders back. Good morning, Mike.
Yeah, good morning, Dennis. Great intro there. Yeah, I've been there way too many times myself, those first 10 years of struggling before I finally found out who William O'Neill was and what canceling was. And that strategy, one of the first things that I learned about that strategy was that there's actually a way to tell when the market is getting ready to bottom. And it's not perfect, but it is a method, and there's ways to test in a low risk way for when the market's bottoming. And I can't wait to get into it and hopefully help a lot of people today.
Yeah. So Mike, how long have you've been trading for a while, right? How long?
Yeah, geez, since 99. So well, what's that? That's 20. Now I feel old. 26.
Yeah, it's like, oh my gosh. Well, if you feel
Sorry.
old, I don't know. I won't tell you how I feel. No, matter of fact, I had a really great workout yesterday, and it was fantastic, and it really clears my mind to be able to get out there and work out. I normally plug in a audiobook, and I've been listening to James Clear book on atomic habits. And let me tell you, if you want to, and it helps me recognize and get past a lot of stuff by recognize that, that wherever we are in our current trading journey, like let's say your early stages and you're trading really bad.
Okay.
It's a reflection of the habits we've brought forward to this point. It's the habits we have. And so part of what we do with debunking the myths is we encourage people to start new and better habits so they can trade in a new and a better way, right?
Yeah, absolutely. That's certainly part of it. Part of it too is coming to an awareness of the habits that you have, because so much of that stuff just tends to be running on in the background that you don't even realize what you're doing it.
Yeah, so, without a doubt.
And so asking yourself the right set of questions, and that's part of what I think we do on this show, is trying to come up with the kind of questions to ask yourself, to sit there, to ponder, that can help to unlock those doors, so to speak.
Yeah, I mean, like I know that our story is similar. It took us probably much longer than we would have liked to have taken to become a successful trader. But for me, it was like almost 15 years of experimenting, of working and hard and all that kind of stuff. But then all of a sudden, it started to turn around, and so it's like now trading it's not so much a rough and tumble adventure like it used to be, because I didn't know what the heck I was doing. So it was like, that's what I mean, rough and
Right,
tumble.
right.
But now it's more definitely mechanic and calculated.
Mm, okay.
And I know if I follow my rules, you know, religiously, that my the profit's going to take care of themselves. I'm
Mm,
focused on the right thing. I'm focused not on my results. I'm focused on the process, and I'm focused. And one of the things I was thinking is just if I can trade perfectly for one day. So
mm.
if you had a challenge, Mike, to trade perfectly for one day, what would that look like for Mike Lamothe?
Oh, wow, that's a great question. So if I were to trade perfectly for one day, I'd need to know what that even looks like. Right.
Okay.
Well, by what yardstick am I using to measure? Did I trade perfectly for that day? A lot of people would say, well, I would want a batting average of 100%, and I'd want to have certain gains. For me, well, what I would want is to first come up with what's the plan that I'm going to be following,
Yeah.
and then the did I trade perfectly that day would be, well, how closely did I follow that plan? Did I make any mistakes
Okay.
relative to the plan? Because if I'm taking trades that I shouldn't be taking, then yeah, that's a mistake, whether it made money or not.
Oh, okay. So
So
in that, yeah, go ahead. I mean, this is good. This is
yeah,
good. Keep
so
going.
following, I think that how close we follow the plan is the litmus test of did we trade perfectly that one day or did we not? And the plan shouldn't just be, something that we draw up each night and just kind of go through the motions. It should be something that's rooted in research, something
Okay.
that we've researched, something that's been tested, and something that will lead to a result. So if we're following this process, right, and that's what O'Neill did with Can Slim.
Right.
He went back in time and he did all these model book studies, and model book studies have been a huge thing for me lately. Just ask any of our members, but model book studies to see, well, what worked in the past for these stocks that ran 500, 1,000%. What were the types of bases? How did they? What did they look like? Were they all even tradable? Because sometimes it looks like it's real easy to hold, and oftentimes when you start to look down and break apart the patterns, it's like, you know what? This one really wasn't for whatever reason, and then you get
Sure.
a much better sense of what's realistic versus what's not, and what you should be trading and what's not. And then it's just a matter of, once you've got that, then it's like, all right, now I've done the real work, because that's what I would consider to be the real work. Now you have a good understanding, and now you're in a position to go out and execute with confidence.
Okay. So confidence. And so, yeah, and I think if I were to answer that same questions, can I trade perfectly for one day? Again, it has, where I'm at right now, it has very little to do with profit and loss.
Right.
What it has to do with is, you know, did I follow my system?
Hmm.
Okay. Which sometimes my system says, well, you don't even trade until the last hour of the day, right?
Hmm.
Unless you've target shot and put in, conditional orders before the market open, which is,
Mm.
but and so those are part of my aspects. Are my stop losses in place? Are my profit targets in place? You know
Mm.
how cool it feels? I mean, this is, I get really excited about this. You know how cool it feels when you're sitting there bopping around, you're just, doing other stuff. You basically have turned off the screen and you get that little ding 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 on your
Mhm.
phone, and you look and it shows that you've just hit your profit target number one, which for me is 10%. Profit target number one, you just go, all right. Equally though, is let's say I had a 5% stop loss and it goes ding
Mhm.
ding. You hit, and I look and say, oh, I hit my stop loss. And I kind of go, I still don't like losses, but
Mhm.
I basically go, I followed my system correctly. But like you said, if I make a trade outside of the hours I've designated that I will be trading, then I have violated my system. And and it's like the old adage, how we do anything is how we'll do everything. And
Mhm.
so if I'm violating my rules in trading outside of, the my designated trading time, well,
Right.
geez, I, I'm basically, I'll bet I will try to shortcut things in the rest of my life, the other
Mhm.
parts of my life, which, hey, if like, I've been happily married. Well, I don't want to say happily married, but I've been married uh, for over 50 years. We're going our 51st year. And let me tell you, it's a lot better now than it was a long, long, long time ago. I was a terrible person to be married to. Uh, but what happens is now we're still in the building mode of constructing a wonderful God-based relationship in our marriage. And so, and I tell you that to say that in turn helped me to basically be more focused on trading my system the right way, because I owe it not only to myself, not only to my system, not only to God, but I also owe it to my lovely bride Michelle. Because if I'm
Mhm.
pissing around and getting outside my rules, then I'm robbing and stealing from her. That's pretty
Mhm.
heavy stuff. You know what I'm saying?
Yeah, it is.
And so anyway, okay, so here's the first thing. Every bull market starts at a market bottom. But
Mm.
most traders realize they're in a bull market. They don't realize it until it's already too late. Why is that? And let's dig into that. I know that Mike covers a lot of stuff in his book about trading psychology and all that kind of stuff. I trade a lot of it covers a lot of stuff in my book that talks about trading setups and the mechanics of it. So if fortunes, and a lot of people just don't realize that fortunes are made by those who position themselves right after a market bottom. And so why do so many traders miss the boat, Mike? Why do they miss the boat?
Oh my goodness, so many reasons, and I know firsthand because I think I've made just about every one of these mistakes in those first 5, 10 years, even a little bit longer than that.
Sure.
So, couple of things. Uh, One has to do with listening to what the news has to say, right? Because oftentimes the news is absolutely terrible when the market finally does bottom. How could it? How could the market bottom? Well, when it seems as though we're all going to die from COVID,
Exactly. Yeah.
right? Everybody's locked in their house. How could the market possibly be bottoming? You can't buy toilet paper, right? Yeah. How is the market? We're going to go buy stocks now. Well, yeah, if the signs are there. And what signs do you look for? There's a very good question. What signs should you be looking for? But and I know that we both look for very similar signs. Well, what kind of signs do you look for when the market is starting to bottom?
Well,
Are you
that's one
testing
of the
different levels, or what are you doing?
yeah, that's one of the things we're going to cover, because I'm going to put some charts up here at, in just a little bit that's going to show exactly. I'm going to show the difference between bear market bottoms by comparing the one from back in 2020 to the one in 2022, because
Mm,
there's some there's some significant similarities, but significant differences also. And so
Okay.
we'll save that and we'll cover that, here shortly. But what are some of the other, one of the reasons I think traders oftentimes miss the bottom and are not prepared for it is one, I think with the increased pain of seeing the market fall, or fear in seeing
Mm,
the market fall, just basically almost uh, puts the person where they go to sleep. They're not, so they stop paying attention, or
yeah.
they lose hope. They're going, oh, this market's never going to turn around. Blah 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 blah, and they fail if they have a system or a process by which they should be checking the market condition at least once a week. They're not.
Right.
They're not. They basically have given up on it, and so the whatever routine that they had, they're
Mhm.
violating their own routine, and
Right,
so
right, exactly. It
and
kind
so
of
they go
reminds me of this old story that I heard about in from Jesse Livermore, and one of the things that I believe he's quoted as saying that there's a time to be in, a time to be out, and a time to go fishing.
exactly. Yeah, yeah.
Right, and so people will hear that, like, so if you, let's say that you're new, or you're somebody that's still trying to figure this stuff out, and it's like, well, it's not really a time to be doing anything, so I'm not going to pay attention. I'm going to go on vacation and tune out until Dennis or Mike tells me that it's time to be back in. Well, guess what? If you're like, if you haven't built the chops up yet, you haven't earned the ability to just tune out. You're
Yeah,
not Jesse Livermore. You can't just come back and start to pick up. Well, like, now's the time to be sharpening your saw
yeah. Well, how do you
for the
sharpen your
vast majority of people out there.
so, I mean, how do you sharpen your saw? Because, I
Model
mean,
book
we're
studies.
what's that?
Model book studies. So, like,
Model book
going,
study.
yeah. So, I recently did the Netflix run between the 2022 to what was it, like a week or so ago.
Right.
Then I did one for Reddit. I did one for Palantir, and I'm starting to do others. Just going back and tracing out the entire move. How would where were the optimal times to buy it? How far did it run? What rule violations were there? What could I have done to have held this?
Right,
Where
right.
could I have added? All these kinds of things. All these are fantastic questions to ask ourselves. And by going back and going through a weekly chart and then diving into a daily chart to get the exact entries and stops, those are the kinds of things that I think are great exercises, great trainings that will allow us to be prepared for when things do turn around. Because then it'll be like, you know what? I saw that somewhere before. It looked kind of similar. Where did I see that before?
Yep,
Oh
yep,
yeah,
yep.
that's right. I marked up this chart here, and it looks exactly the same as this one from 4 years ago, 5 years ago, 3 years ago. And
Yeah.
then you go and you execute, and you're able to do so with confidence, and you've got a plan for if it does work or if it doesn't work.
And I've got a little secret. Can I share it?
Yeah. Oh
Can I
yeah,
share
yeah.
it about model books? Model
Mm,
books, because you're
all
talking
right.
about doing it with stocks, and I agree with you 100%. At the same time, we have to recognize that some of the people who's listening out there, and if you're listening out there, and if this applies to you, please leave a comment. Don't be a ghost listener, but
Mm,
just go ahead and leave a comment in there. If you can relate with this, a lot of people have their 401ks, and their 401ks are growing, but they're limited on how they can invest their 401ks.
mhm.
They typically are limited to, they can invest in something that emulates the S&P, the Nasdaq, or maybe the Russell, the growth, the small caps, or even the
Right,
Dow.
right.
And so go back, grab a chart of,
Mhm.
like, not the spiders, but S&P, the S&P, the Nasdaq, the Russell, and build a model book for each one of those indexes. Start with the
Mhm.
S&P. Build a model book for that, and you will be absolutely amazed at what you find, because then
Mhm.
you will see patterns start to repeat themselves. And also, oh, Kuka, thank you very much. And Kulala, okay. And so build that, and then, as you said, Mike, write on it. Get your pen out, print it out, write on it, put it in a binder, so you can refer back to it over and over and again. And if a person takes the time to do that, I won't guarantee that they're going to be a better trader, but they are certainly increasing the probability that they will. You know what I'm
Mhm.
saying? So, and
Yeah.
I don't know if you've ever done that before, but I basically, when I was building my system, I used the S&P, or the S&P, going back to 1929.
Oh yeah,
And
yeah. Here, yeah. Keep talking. I've got something to show you.
okay, going back to 1929, and so really rock solid. And I really love the way it went together. And then I used that to then build off of, because why did I do the S&P, or why did I do the indexes? Well, a couple of reasons. One is I didn't have to account for any of the oddities, such as earnings reports and that type of stuff. And it gave me a much more pure picture of just the technicals, yeah, which was just so rock solid. So anyway, so what are you going to show me?
Yeah, so I just dug this out from well, when did
Oh,
I
yeah,
do this? I did this maybe in 2013, and that basically exactly what you said, going back in time and plotting out the charts from this one happens to be from 2011, the daily chart of the Nasdaq marking the rally day, the follow through day, and it has this for all these different all the different periods. Here's one from 2009,
right,
and you start well, when we were going through this course, oh, what we were also able to do was to come up with specific rules for,
mm,
well, how heavy or light to be based on what the market was doing at the time, what constituted a rally day, what constituted a follow through day, when you might need to hold for a little bit longer because now all of a sudden the market is trending above a certain moving average
right
versus
on, yeah,
just kind
yeah,
of
yeah,
doing a little juke and jive around a moving average.
sure,
All sorts of things like this, and you know, even if you don't have a printout like this, just uh, go to any charting platform. Go to TradingView, it's free. And you could go
yep.
back in time for 20 years and plot this kind of stuff out yourself.
And so, no, I agree wholeheartedly. And like you said, it is just, plot it out. And I mean, let's see, I cannot encourage anybody any more than to do that. But I have something really cool I want to show you first.
Yeah, yeah.
And if I can, let me pop over here to the screen. I think this is the one I want.
Oh, let's see what we got there.
Okay, can you see that? Hope you can
Yeah,
see that.
yeah. You've got the uh, Google Doc up.
I do. What I'm going to do is, let me see if I can blow that up a little bit. And a lot of people don't realize, okay, they don't, digest that. What is the story about bear markets and bull markets, right?
Hmm.
And so since 1929, there have been approximately, well, around 26 bear markets. And
Hmm.
here's some of the things I want to call to your attention. This is one, the bear markets on average lasted a quarter of a year, or not 3/4 of a year, 9.6 months. The average
Hmm.
decline was 35%. Now, were some of them deeper than that? Yeah, they were. Okay. The one from 1929 was down about 80+%. However, on average of the 26, that's how much they've declined. So
Mhm.
look how short the bear markets tend to be. The worst bear market lasted about 3 years, actually, and that was back a long time ago, 1929 timeframe. But then on the flip side of that, look at what about the bull markets? Well, there's been 26 bull markets since 1929. Now, if you don't, you may not agree with these numbers, but they are researched and they basically last 2.7 years. Now, I've heard it last, up to like 3.5 years, something like that. But
Mhm.
here's the biggie, guys. Here's the biggie. Okay. And why we started off with this. If I miss these opportunities, I'm missing a chance, kind of a chance of a lifetime to develop wealth. And so learning how to find the bear market bottoms and get ready to move into the bull market upside. Look at that, 114% gain on average. And I recognize probably very few of us were around back in 1929. I know I wasn't, but check that out. If let's say during your lifetime you experience 12, 13 of those or 10 of those. If you're compounding at 114% on average, that's going to be pretty sweet for your retirement. You know what I'm saying? But being
Yeah,
aware of
absolutely.
that, bull markets last 3.4 times longer than bears. Bear markets feel, there's that magic word, feel intense, but are
Mhm.
relatively short-lived. Bull markets more than triple the losses of a bear market on average, and every bear market has always been followed by a bull market. And so that's why so many professional traders and traders who've been trading a long time, when they see us going into a bear market, they get excited. I mean, they're going, oh yeah. I mean, almost giddy. You know why? Because they know in a very short period of time, relatively short period of time, that they're going to have an opportunity to jump on the bus and make some big gains. And so that's, that's one of the things that we all need to be aware of, Mike. And,
Mhm.
and uh, knowing that is, I think, it gives you an edge because education wise, you are the person is basically just jumping on, be ready to jump on. So,
Mhm.
so we talked about the reason, any other reasons, like going about the psychological aspect of why traders move, 5 reasons why traders miss the reversal at market bottoms. History tells us that the strongest gains happen in the early stages of a new bull market. So why do so many traders miss it? This critical time and time and time and time again. So what are some of the
Yeah.
the
So fear is still in control, right? So let's say that you've been in a bear market for 8 months, and it's
okay,
like, oh man, I know it's going to turn around soon, but I've seen some pretty steep declines, and I've seen some pretty sharp rallies, and then I've tested it, and then it rolled right back in my face. And
right.
let's say that you do that 2, 3, 4, 5 times, and it's just like, you know what? I'm getting eaten alive here. I'm getting chopped up, and you know what? Let me just sit and wait.
Okay.
And that's the attitude that some people have. And it's that, and those tend to be the types of people that say, I knew it was going to bottom here, but don't do anything about it
Okay.
because they've been burned one too many times.
So I mean that has a lot to do with recency bias, but sometimes it's actually
Yeah.
just their own habits of. I mean, so many people, and I was one of them. I love to try to I would over anticipate and jump into a trade before I should have.
Mm,
My momentum indicators had not shifted, but they looked like they were getting ready to.
mm,
And oh gosh, how many times would you like to go back and get those trades back that you made because your mind was telling you and that, well, it looks like it's going to. It looks like it's going to, but it hasn't
oh,
yet. But it
oh,
looks like
sure.
it's
If I
going
could
to.
have those
I'm
back,
gonna
I'd probably own an island somewhere. Huh.
yeah. And so, but yeah, and so that's one of the things, especially if a person is, does trade momentum indicators or uses those. Um, the and I use because I used to be a stochastics trader, and what I would do is stochastic would be tracking down. It would be tracking down. No, from this side. There we go. Tracking down, and it was towards the reversal zone, but it hadn't
Mhm,
reversed yet.
mhm,
And I would sit there and go, well, yeah, it looks like it's almost close enough. I wouldn't give a consideration how close I was to support or if I had a reversal candlestick yet. And so I was constantly making the same mistake over and over and over again. And so when a person makes a mistake over and over again, similar to what we're talking about here on missing reversal, what kind of habit pattern does that set up for them?
mm. Well, if they keep on missing that particular trade, or if they jump in too early, then it's almost like touching the hot stove.
Okay.
It's almost a lot like touching the hot stove where, you're touching it and you get burned, and then you're afraid to touch it again.
Yeah. Yeah, but
Whereas
yeah.
whereas, let's say that it's a pot on the stove, and
Okay.
you touch the hot pot, and you pull away. So now you're afraid of the pot. Whereas
Okay.
what we want to do as traders is, oh no, well, we got to put on a glove and then go touch the hot pot.
Ex- yeah. Excellent. Excellent. Yeah. Because it seems like for many traders out there is yeah they've been burnt by touching the hot stove, right?
Hmm.
But it almost seems as if they're stuck in this habit pattern that is basically circling to the downside,
Hmm.
and they keep going back and touching the hot stove to see if it's hot. Still see,
Right.
well, maybe it won't be hot this time. And in their hand, they come back with second degree burns on their hands, and they do it over
Mm.
and over and over again. And because I know that I don't know, do you think sometimes that traders have a self fulfilling prophecy that they want to punish themselves because they don't deserve to be successful? Ooh,
I think that some people do that. I think that the people that do that don't realize that they're doing that.
okay. Oh, so you mean some of our habit?
At least from my experience, it tends to be a very subconscious thing that ends up playing itself out.
Oh,
Um,
okay. So some of the habits we have that result in, let's say, their limiting beliefs and habits,
mhm.
they're subconscious, and so when they blow up a trade or miss an opportunity, it's not so much a self-fulfilling prophecy as much as it is they're subconsciously conditioned to self-destruct, to basically
Yes,
sabotage.
yes. So then, well, how do you break that code?
I don't know how.
That questions questions are the answer.
Oh, okay.
So part of what I talk about it in the trading mind wheel and also in the mind shift guide are the types of questions that people need to ask themselves in order to start digging deeper and start to unravel and start to get to what some of these limiting beliefs might even be.
Okay.
So you need to do that. You need to go through these kinds of exercises to figure out, well, what beliefs do I even have? And then
Okay.
from there, you can start to see which ones are limiting you from getting to where you want to be. And then from there, you might say, well, it's easy if I have a certain belief that's preventing me from trading well, let's say that I have a certain belief about money, and that money is
Right.
very hard to come by. So when I have a little bit of a profit, I should take that money because it's hard to make gains, or
Yeah.
I should hold on to a loss because, well, I don't want to lose and it'll come back. If I have beliefs like that, then maybe I should just get rid of them and toss them out the window, and it'll be that easy to do. Well, maybe it is, maybe it isn't, because depending upon what other beliefs we have that might be tied to those beliefs, it could be a little bit challenging. For example, let's say that your father gave you some of those beliefs, and you
Right.
have great respect and admiration for your father. Maybe your faith tells you that you should honor thy mother and thy father. And if I toss
That's
that
good.
belief, then I'm disrespecting him, and well, I shouldn't be doing that because now that's a sin. Well, that's some of the thing. How would you even know any of that if you don't go and start to dig into the questions? So
Yeah.
digging in that way is step one.
That's great. So do you have like now I know we can get really complex in
Yeah, a little bit.
the the no the in the way we the questions we need to ask ourselves, how deep the hole is. Uh, I encourage people to basically set aside time to review and reflect. Review and reflect. You know their their trading day, their trading week, their trading month, their trading quarter, their trading year.
Hmm.
And excuse me just a second.
Yeah, that I agree that people that the post analysis time should be scheduled. I like
Yes.
to have it on my calendar at those points in the year, also at the end of each month as well.
Yeah. And I would like to encourage people, don't overthink it too. Don't overthink it. Just make sure you've got a journal. It may be it uh, a ring binder or a professional journal. That's fine, but have a journal. And there's three
Mhm.
questions that I find are very useful. Is what went right, what went wrong,
Mhm.
and what did I learn? What do I learn? Or you can alter the last one is what do I need to learn?
Mm.
Uh, and then start digging in. And you made a statement, a long time ago, um, in our in our friendship, that
Oh
you were
yeah.
talking about the layers of an onion. Uh, that a person needs to ask themselves questions, and once they've answered it, go to the next level deep. But why? Why am I doing this? And then answer that. And then, but why am I doing that? And you said it takes sometimes going down four, five, six levels,
Hmm.
layers of the onion to get to sometimes some of the root causes for that may be subconscious for what's causing us to trade poorly.
Right.
Did you say that? I'm gonna
Right. Yeah.
verify that.
Yeah,
I know.
so we do want to go about 7 layers deep, asking the question why. Uh,
Yeah,
a lot of people say that they want money from
right.
trading. Well, do you really want just nobody wants pictures of dead presidents? You want what the money is going to get you.
Yeah, exactly.
Right, and then you start to ask, well, why is that important? Why is the other thing important? And go down that line, and then you start to get to the root cause of, well, why is this? money important?
Okay. Yeah.
Like, well, what are you really after?
And so, and I think that and doing that exercise is painful. It can't be. Hold on a second. My alarm was going off. No, it's painful. But the fact of the matter is there's two different kinds of pain. There's the pain of staying where you're at and not
Mhm.
taking action. There's the pain of and the hard work. And when I say pain, what I really mean is hard work. There's the pain
Mhm.
of staying where you're at, which then you're going to basically living with the habits that you've been living with to this
Right.
point in time. Or there's the pain of taking action because I want to be better, which then brings it back to our identity. And I think
Mhm.
that oftentimes traders, we we have an identity crisis, if you will,
Mhm.
because we come into trading with a particular identity of ourselves.
Mhm.
And listen to your self-talk, and it'll tell you what you think your identity is. Like if you're always, constantly saying, "Oh, what a dummy," "Why did I do that?" "Oh, I wish I would stop being so stupid with my trading." Okay, that's an identity that needs to be fixed. And so you walk that out the other side of, okay, listen to your self-talk and then start improving on that identity. And then ask yourself the question, what do I want my identity as a trader to be? Is it, well, I want to be a rich, successful, rich, and just make all kinds of money. Is that my identity? Or a possibly a better identity would be, I want to be the kind of person that can be trusted, and I know I'm going to do the right thing with my trading account and with everybody I come in contact with. And again, that's an identity that transcends the concept of just trading.
Hmm.
You know what I'm saying? I mean,
Yeah.
just wow, that was philosophical, wasn't it? Jiminy
It sure
Christmas.
was. Well, uh, not to put you on the spot, but
Okay.
what would you say your trading identity is?
My trading identity is to be you know, to basically just follow it. It's I am a mechanical trader from a trading perspective. Um, and then I identify as I know I will, you know, do the right thing when I'm trading on a regular basis. So I can trust myself. So I
Mm.
would say I am a trustworthy trader. And I know
Mhm.
that doesn't sound very exciting, but my profit and loss statement really liked that concept. And so, you know what I'm saying? And so, hey,
Absolutely, it's important to be trustworthy.
so what
Trustworthy
about
means
you?
that you're following that there's a lot that's baked into trustworthiness. If when you trust somebody that does whatever do they feel like?
Yeah. Oh,
Probably
no,
not,
they don't.
right? No,
No.
he would if I'm just gonna walk in and, just take a look at, well, what's moving today? Oh, well, that looks good. Let's throw some money over here, throw some money over there. I don't have much of a plan, but I feel like trading. That's not a trustworthy person. But if you are a trustworthy person, then you probably do
Yeah.
have systems and mechanics and rules and perhaps even a certain level of automation.
Oh, yeah, without a doubt. It kind of gets back to the aspect, and we, in the ancient script that we talk about, and you and I both follow. It talks about, one of the greatest commandments was to love your neighbor as you love yourself. And so
Mm,
many people, I think, have a hard time loving their neighbor because they don't love themselves. And it's almost impossible to love yourself unless you also love God. And so, anyway, and you may ask, well, what does that have to do with trading? Well, how you do anything is how you do everything.
Mm.
And just take that to heart. And part of the reason, if you're struggling with your trading, part of the reason may be because you're struggling with other places in life that 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 you wish you had control over. And so part of the thing, it gets back to what we've learned today is, can you take control of yourself for today? Not for the week, not for the month, but just today. Can you do what you need to do to be successful today? And
Mhm.
I'll just leave that out there. Let's hammer really quick on the 5 reasons, because I think these are really good, Mike. Is that I'll take number 1, and you can follow on with number 2, is
Okay.
the 5 main reasons traders miss the bottom on reversal. First, they're still stuck in bear market thinking. Fear is still in control. They assume every rally is a dead cat bounce. I've been there,
Mm.
done that. Recency bias makes them overly cautious after seeing months of decline.
Yeah. Number two, not having a routine for checking market conditions. So no habit for checking the price action or volume or key technical shifts. And so if you don't look for bottoms, then how can you really expect to find them?
Exactly. And then, oh, I love this one, is they wait for too much confirmation.
Yeah.
uh, Confirmation, or it's either kind of like the two sides of the same coin. They either wait for too much confirmation, or they don't have enough confirmation. So
Mm.
confirmation is necessary, but some traders wait so long they enter after momentum is already taken off. And what are the key signals that provide smart confirmation without being late? They have not defined that yet. So what about number 4?
Yeah, number four, they rely too much on headlines instead of price action. Yeah, that this one is a big pet peeve of mine because if you're looking at headlines, uh, are that you have to ask yourself, well, why is the headline even there? Is it there because they're trying to help you make money? Right? Is that their objective? Or, well, no, the objective is to get eyeballs. Right?
Right.
It's not to help you make money. So don't rely on headlines. The Here's a point: the media is always bearish at the bottom. Yeah, uh, almost without fail. Almost without
Right
fail,
on.
it's going to be bearish at the bottom. And if you wait for a positive news cycle, the market has already run. So price action is the signal, not CNBC, not Fox, not your favorite guru on X. Uh,
Right on.
Price action, price action, price action is the signal.
Price. I agree wholeheartedly. The thing uh, that aspect of the headlines. Ask yourself a simple question: is what I'm reading in the news, is it making, is its primary key, reason to make me emotional? Because all the financial networks and all that kind of stuff, they are about selling headlines. They're, in like it's the old adage of newsprint. If it bleeds, it leads, right? And so,
Mhm.
and so it basically, they want to manipulate your emotions so that you know I don't know if it's so you'll make bad decisions, but I know oftentimes if you're listening to them, you will make bad decisions. And so,
Yeah, that's a great point. Now, when was the last time you read a headline that was not emotionally charged?
oh, I know,
I can't
yeah,
remember one. Can you remember a time when it wasn't where it's just like, oh, the market just moved sideways today, and
yeah. It was a very dull day. It doesn't happen very often, and because they're either talking about where the market's been or potential of where it's going, And so that keeps, and if you're dwelling, if you're dealing with fear, you know, fear can be so locked into craziness because you're trying to, something you can't change, which is the past, and something you can't control, which is the future. Again, it comes
Mhm.
down to how can I trade perfectly today? The uh,
Mhm.
the other thing is they're looking for the perfect entry instead of just a strong entry. You hit the
Mhm.
ball out of the park, Mike, when you said you have to trade the price action. Traders get obsessed with calling the exact bottom instead of being positioned to recognize it because people are not, we can't tell the exact bottom. And oftentimes you can't tell that it's a bear market until after you've already dropped the 20%. You
Mhm.
don't know, and so a lot of times they call things a bear market or a bull market after the fact. So learning how to scale into trade using key signals to layer in smartly is one way over this. So,
Mhm.
okay, we've now, we know why traders miss the bottoms, but how do you actually spot the bottom? That's where we're going to go next. And so, all about English. Thank you. Almost all media is intended to manipulate your emotions. Yeah, it is too. So let's go ahead and jump over to. There we go. I want to talk to you really quickly about two different bear markets that took place in the recent years. One of them is the one back here in 2020. This is the real fast COVID crash. And then here's one that was more what you would notice as a average type of bear market. Did you realize, Mike, did you realize that we've had two bear markets going back since 2020?
Yeah, you know what? I they both happened so quickly. Yeah, I forgot that yeah, we kind of sat through two bear markets in the last 5 years.
Yes. Yeah, absolutely. And that's a little bit uh, closer together than you would think, kind of. Um, but we had the first one back here in 2020 and two different, totally different type of visual. This was a V
Yeah.
bottom, excuse me, V bottom, strong V bottom. And what happens afterwards? This is a weekly chart of the S&P. And you notice it fell. How much did it fall? It fell about 37% was the bottom. How long did it take it to fall that far? This was like a real short one. I mean, it was like 35 days, a little bit over a month. And it was done. And it was starting to rack back up. Again, there were a lot of things happening in the world at this time with
Hmm.
the COVID. This was a COVID COVID bear market. But very quickly you get a reversal signal here, but look at the clues. That's what I want to point your eye to, is that I have both RSI and TSI showing up over here. Both of them bottomed about the same time and then started moving back up. And then once they reversed and started up to the upside, as long as the RSI is above this bottom line, it can go and continue to climb. But then we went into this next pullback. Let's dissect this a little bit more to notice that, okay, from the low
Hmm.
to the high of the bull market, okay, excuse me, it went up 119%. Remember what our average was for a bull market run?
Yeah, it was
14,
right in
100,
there.
yeah, 114%. How long did it take? It took 644 days. That is approximately a little bit over no, a little bit under 2 years. So,
Hmm.
in the ballpark. But again, that was a nice run. Now, if you're like Mike and I think Mike likes to trade it too, is trade the leverage ETFs. If
Hmm.
you're trading the UPRO or something like that, you could be multiplying your return dramatically. What about the next bear market? The next bear market here started in December of 2021, it fell to its low here. And how many days was that? 287. What was our normal number of days on a bear market? Wasn't it like 293? Wow, pretty darn close. How far did we fall? We fell a little bit, around 20, about 27%.
Mhm.
So again, a little bit more shallow. But then, what were the clues that could have gotten us, into a trade early? I come back to the concept of the momentum, TSI, and I love TSI, and I love RSI also, because what you can do with it is you can basically use the patterns and the crosses to figure out, oh, I should have gotten in there. Now, did I have to be watching this on a daily chart? And the answer is no. I could have been watching this on at least weekly. And so work that into your habit pattern of watching it on a weekly basis. So here was one entry. And then there was a secondary offering here where it actually came down and made a lower low. And what was telling us to back up the truck was that lower low was accompanied by a bullish momentum divergence. And so if I come up from here, that would have got us in here. I'll just draw that crossing back up of the momentum shifting. But it would have been a pain in the butt though to watch this go. Come here and hit the high. This may have been a tradable, profitable trade, to the upside, but then it failed. Came back down and took 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 weeks. So 2 months of waiting. 2 months
Mhm.
of waiting. So, it comes at that's why I say be patient, be prepared. But now you're equipped with the tools to analyze your charts. And I encourage you, go back and look at past bear markets. Go to 2008, 2009. Go to the year 2000. Go back even all the way with utilizing not the spiders, but you utilize the S&P on a weekly chart going back to 1929, and then track yourself forward. And as Mike said, develop yourself a model book. And this is the specifics of this model book is to define both market tops and market bottoms. So, Mike, what do you think of? And again, it's so it's so now that you know what to look for, it would seem like it would be just easy. But will a person take the time to put in their reps to be able to understand and see this?
Right, because it's one thing to hear a couple guys talk about it on YouTube. It's another thing to actually go and mark up the chart yourself. And
Right
it's
on.
in doing those reps where you'll start to build the muscle. Because even when you're doing that part too, you might start to do it, and maybe it looks easy. Just being like, oh yeah, Dennis just drew this, and that seems pretty easy. Let me go and do that. And then it's just like, you know what? Well, now I've got a question about this. Now I've got well, that's what you go and you post comments on the video, or you actually go and sign up for a service, because Dennis has a coaching service, and he's available. So that's where stuff like that starts to come into handy, because if you're trying to do the work and you have questions, it's great to be able to go and talk to somebody and get some real feedback of, are you doing the work right?
Yeah, right on.
It's like having a
So
personal trainer.
I have a trick question.
Okay.
Which is more okay, if you're trying to build new habits,
Hmm.
good solid trading habits, which is more important? Time or reps?
Yeah, it is a trick question. You need to be doing the reps properly. Yeah, if you're doing the
Okay.
wrong things, then that's not going to help you,
Okay.
right? So if I want to see the sunrise, but I'm facing west, it doesn't matter how long I'm gonna do it for. I'm doing the wrong thing.
Okay. But which is more
You need
important?
both. You need to be doing the reps properly, and you need enough time to be able to do it.
Okay. Great. So,
That's my answer.
okay. And one, okay, let's say I spend the next 6 months and I do one rep.
Yeah, that's no good either. You can't just be sitting on the
Okay.
couch and be like, "All right, it's time to get up." Okay. Oh man, that was good. And then just sitting there. No, you've got to come up with a come up with a training plan and then stick to that plan too.
A
So
trading plan.
you
Yeah.
need
When you ran the marathon, you've ran, how many marathons have you run so far?
3.
3. Did you write out your not trading, training plan?
Oh
And
yeah,
did you
yeah.
follow,
Each time,
and so did you have a little bit to do every day?
absolutely. Yeah, you can't. You can't hope to run that far without training a plan and following through consistently.
Right on. So, so, you know, you were able to take that information, those habits, those fantastic habits you made for preparing for a marathon. Did you find that they were transferable over to, building a trading plan, trading, you said, this is a tongue twister, a trading training plan, because, I believe in training. I believe in doing reps. I believe in simulation and all that type of thing to help a person become better. I agree with you wholeheartedly that it needs to be perfect.
Mm.
It needs to be. It won't be perfect practice to begin with, but get started. Start with a rep, even if it's just doing one simulation per day. After
Hmm.
what you've just seen here, one simulation per day, and then commit to that. And that basically gets back to that: do the right thing for one day, and
Right.
let it build to being able to do 5 simulations per day.
Well,
But
uh,
so
yeah, here's one thing that I would add to it too. One of the big differences between marathon training and trading training is the accountability factor. So when I was marathon training, when my first two, I was doing it with a group, and I was also raising money for charity. And I
okay,
also told everybody that I knew that, hey, I'm going to do this. So there was a lot of accountability baked in. Now, when you take a look at how most people go and they trade, you're sitting there watching a video and no, that sounds pretty good. All right, they said to go and do this. All right, let me go off by myself and I'll put some stuff in the calendar. And are you really
yeah,
talking to other people about this? Is there any accountability beyond maybe blocking out some time for yourself? For the most part, no. Right?
yeah,
For the
yeah,
most
right
part,
on.
it very private or very solo thing.
Yeah, yeah,
So that's where I think that people actually would do very well getting some sort of coaching, whether it's a group coaching or one-on-one coaching or mentoring or something that can help you be more accountable, help it to be a little bit more collaborative. So that way there's that accountability factor where you're not just relying on yourself to do it. Well, whenever I've had partners or some group dynamic to it, I've been a lot more accountable, consistent, and it doesn't make the work itself easier because, like for marathon, you're still running 26 miles, but at the same time, doing the consistency of it and making sure that you're doing it, that part becomes a lot easier. And the same thing is true with trading.
Yeah, you're so right on, because there's a psychological factor that kicks in, uh, that if a person, if you know, not you, Mike, but 'cause I know you've done this, but I'll be talking to everybody else. If a person will find an accountability partner, okay, and now you want to be careful picking up your accountability partner. You're going to want somebody who will, one, hold you accountable, but also won't kick dirt in your face, dirt in your face. You know, because
Mm,
some accountability partners, you know, bad choice. Like don't ask your spouse to be your accountability partner.
mm.
I suggest this because they know all the rest of your faults also, and 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 it will sound like nagging if they're holding you accountable. Uh, however, there are uh, uh, find somebody, another trader. Find another trader or somebody who's gone through the ropes. And I encourage people that are autopilot trading members, find an accountability partner over on the Discord channel and ask them to be your accountability partner to work through the process, and because, one, it'll make it a lot more fun. Secondly, you will learn a lot more, and thirdly, I think you will accelerate your learning process. Is that any points you want to add to that, Mike? That have an accountability partner will help you out with.
Yeah, all that is fantastic. I think that even if so you could do that, you could something that we've done in the past too is form small groups
Sure.
within our
Yeah.
own program, or for other people too. Like if you're able to just get around other people, right? And
Yeah.
this is why the New York City IBD meetup was the initial turning point for me. Back in 2011 was when I joined that group, and then
Right.
later on, uh, it was getting around the other people.
Yeah.
It
Yeah.
was starting to, and we just organically came up with accountability partners and those kinds of things. And that's
Yeah.
why, trading is so siloed. That's why having a platform like this, where you and I are here on YouTube and talking to people on here, I think that it helps to create a community where you could start to see, like, yeah, you know what, like I'm kind of on the same page with this person to that person.
Sure.
Let me reach out and see, hey, you know what? Like I'm here's where I'm at. Where are you at? You want to get together? You want to help each other, or maybe you go and you find somebody that could that's a few steps ahead, that could act like a coach or a trainer or a mentor or something, because
Yeah.
it's going to make the
Exactly.
game that much easier, and it's going to transform something that's just a casual hobby, and that's what it starts out for everybody, a casual hobby, to something where you're making some real progress and some real money.
Yeah, and I'm going to make a in your face kind of statement right now. Not you in your face, but in everybody else's face statement right now. If you're not willing to invest in how well another person is trading and getting engaged in that and finding accountability and pour into them, you will never reach your potential of being a great trader. Now, you may not like to hear that, but hey, the OG here, I'm telling you the truth. If you're not investing into somebody else's trading journey on a Discord channel or something like that, then basically you are limiting your own success. So,
Mm.
Mike, I don't know if you agree with that or not, and that's okay, but
You
it
know
was a
what?
little bit.
I thought about it for a second there, and I think that there's a lot to it. Well, because if you're going to go pour out into somebody else, meaning that you're going to go teach somebody else,
Right.
a lot of what like if you start to pour it out, it's either going to be like, oh, well, does it look like Swiss cheese? Right? Like there's all these holes in my thoughts, and then
Right.
you're trying to teach somebody, well, I better plug up those holes, and so that's a benefit that can come out to you. Right.
Yeah. Yeah.
Well, when I first started to try to teach people at the New York City IBD meetup, I remember getting up and being very nervous with my first presentation because, sure, I had
Yeah.
read the book and I attended the sessions, but how well do I really know it? Well, that's when you start to get questions back and like, oh, you know what? I haven't thought about that way, and it helps when you start to teach others. It not only helps them, it helps you as well because it helps you have different perspectives on
Yeah.
what
Yeah.
you might have thought.
Yeah. And it's just, it is the, it's kind of the rules of reciprocity, if you will. And I'm not trying to
Mm,
get all mystical on anybody like that, but it's one of those that if you're constantly in the intake mode, where
mhm,
where a person's intaking and it's all about them and it's all that kind of stuff, it limits. There has to be an outflow. Because
mhm,
if there's no outflow, you get stagnation and the water
mhm,
like the pond will turn yucky and you don't want to
mm,
swim in it. And when, if you're not outputting, then into somebody else, making great comments about their trades or saying, hey, let's work together to become better
right.
traders. So anyway, so guys, how to position yourself for the next bull market without guessing. Traders who wait until it feels safe to buy end up chasing. So, how do you get in while, you know, how do you get in while risk is still low and reward is still high? So, Mike and I mentioned, Mike has mentioned several times about developing a model book. So, have a
Mhm,
smart playbook for trading at market tops and market bottoms. Build your watch list ahead of time. IBD talks about be watching the stocks that are holding up better than the rest of the market because
mhm,
they will typically be your leader going into the next portion. Start scaling in when the signals align. Follow a system, not your emotions, and be ready for retest because oftentimes if on the first on the low, the lowest swing low, oftentimes you will get a little bit of bounce, but then it'll come back in a retest. That oftentimes is the time to back up the truck. So ride the trend with with a trailing exit plan. And so if a bull market is forming right now, which we're currently in a bull market, so we're closer to a top, I think. What should traders uh, be doing this week to prepare? But I'll just ask you, what should traders be doing this week, Mike, to prepare for whatever's going on in the market?
well, I think that you hit on at least a few things that people should do earlier, which is tracking the major indexes and having certain indicators that you're looking at and observing to see, well, when is this thing going to turn?
Right
Um,
on.
so observing the major indexes is one. Something else that I like to do, I like to take a look at the what the stocks are doing. So I'll run screens and I'll
Okay.
see, well, what stocks are passing my screens, and then when I find those, I take a look at, well, how are these stocks positioned right now? Are they in steady declines? Are they starting to level off? Are they
Sure.
setting up in some sort of an actionable pattern? And if they are, then I start to assess the quality of those patterns. I start to assess the risk side of the equation and the potential reward side of the equation. And if those things start to line up, then that's where my opportunity is because I'm looking for the higher probability, uh, low risk, high reward opportunities. And
Right on.
as they manifest, then great, I'll give it a shot. If they're not manifesting, then the high reward trade is sitting on my hands.
Yeah, it's like the old adage that cash is a position too, right?
Absolutely.
Yeah, and so no, that is so spot on. And you mentioned the word that oftentimes people don't talk about in the aspect of trading. You said quality. There are what we've talked about today, and we've given examples of are quality setups that have a low risk, high reward, high probability, potential. And I'm not saying that you can't make money in on pullbacks while the trend is going on, but those oftentimes are not quite the same high quality trade that's going to lead to a really huge move, that 100% move. And so
Right, exactly.
So in your evaluations, learn what does my real, like my 5-star quality setup look like? And then you'll have a 3-star quality setup. You say, yeah, I want to be in this one, but maybe I do it a little bit differently where I'll take a smaller position size, whatever.
Mhm.
But if you're not going to, a person will not be able to determine that unless they, guess what? Do their reps, do their reps with their model books on either the indexes or individual stocks that have done really well. Have you done a model book for NVIDIA yet?
Did I do a model book for NVIDIA? No, not yet, but that's on the list.
That's on the list. Cool. So, well, Mike, wow. I would just want to encourage everybody, if you have gotten value from this episode, be sure to subscribe. Also, leave a review over there on Spotify or in the well, wherever you go. Leave a review to say, if you're listening on X, if you're listening on Instagram, on LinkedIn, or any of the other platforms that we broadcast on, just leave a review. Tell people need to be listening to Mike and Dennis, because we're really handsome young men who know the stock market really well, and so share it with another trader who needs to hear about it. So, Mike, you got any closing comments?
No, that's it. I'll take the handsome remarks and I'll leave it there.
All right. So, like we like to say, is join us next week, because we're going to keep debunking the market myths for you. Aloha and God bless everybody.
God bless.